Resource Watch is brought to you in association with Tebe Investment Corporation.
The Africa Oil and Gas Expo is Africa's largest gathering of oil and gas professionals to take place on the continent. We speak to the industry leaders to get their insight on the prospects for the industry. I'm Nozipho Mbanjwa. Welcome to Resource Watch. Here's a look at some of the top stories in the sector this week.
British-based Rio Tinto has rejected a merger approach from smaller Swiss rival Glencore, a deal which would have created a $160 billion mining giant. Rio Tinto said Glencore had contacted it about a potential merger in July, adding that it turned Glencore down in August and there'd been no further contact between the companies on a deal. Amara Mining plans to invest $400 million over the next 2 years to build one of Africa's largest gold mines at its Yaouré property in Ivory Coast. Resources at the mine stand at 6.3 million ounces with a projected lifespan of 12 years. Construction of the gold mine is set to begin in 2016, with production due to start in 2017. UK-based firm Savannah Petroleum plans to invest $90 million in its project in Niger in 2015 after receiving a production sharing contract from the government in June this year. A portion of the investment will be used to drill 5 exploration wells and conduct an environmental impact study.
Taking place at the Sandton Convention Center, the Africa Oil and Gas Expo brings key decision makers and industry leaders from the 4 corners of the continent to discuss the latest opportunities, exploration developments and downstream projects occurring in the most exciting region on the planet. Our executive producer Vanashri Govender has this report.
Transactions worth $1 billion took place every 17 days in Africa's oil and gas sector last year. And as you can see behind me, interest is high in Africa's energy industry, which looks set to become the driver of Africa's economic revival. Presently, there are about 500 oil companies operating on the continent. Nearly 9 million barrels of crude were produced every day in 2013. More than 80% of that came from established players such as Nigeria, Libya, Algeria, Egypt and Angola. Ghana is a new entrant in the West African region. Mr. Kamil Mohammed, the president of Ghana Oil and Gas Association, thanks for making the time to talk to us. Can we begin by you sketching an overview of what the oil and gas sector is like in the West African region?
Thank you very much for the opportunity. I think the West African sub-region is now the hottest oil play in the world, considering Nigeria was the first to go into commercial production, and Nigeria's story is well known and the volumes being produced there even today are well known. But what is more exciting is the new developments coming up. Ghana, for instance, since 2007, 24 discoveries, already development in 3 areas already, and we are looking at going to 250,000 from 100,000 that we are currently producing already. Senegal has already made discoveries. There are already exciting prospects in Guinea-Bissau, all along the coast. And when you look at the geological map of the sub-region, what you see is that all the features displayed at the Nigerian side replicates along the coast, which means that, or suggests by the technical people are telling us that then very soon in the near future, in the next decade or 2, we are going to have as many oil fields as we have in Nigeria along the sub-region.
So obviously this presents investment opportunities. Are you seeing that coming to fruition?
Yes, of course. So far, a lot of the companies, the terms they are getting, the governments have really put in place and are putting in place very attractive terms that are bringing these investors down. Now, when you look at Ghana, for instance, as soon as the first discovery was made, we focused on putting in place the legislative environment to attract investors. We put the laws that would ensure that we have a petroleum commission, we have a oil expenditure law, we have all kinds of legislations that remove ambiguity. And we've also put across attractive terms that make it very attractive for investors to come forward. So the same with other countries. But what we are looking at is that we want to be partners. And because these governments are very keen to bring in the money and the expertise that the foreign companies have, as well as trying to build their own local capacity, this marriage is really going to work, because then it shows that they can come and make money while we also benefit from what they have produced, and then we can learn so that later we can take over when they are not there or when they go.
So what is the level of localization then at this stage?
Yes, at this stage, it's not as much as we want it to be. For instance, in Ghana, we have passed the local content law, which is a law which specifically allocates certain services to Ghanaians. Once you meet certain criteria, and then also give certain allocations or give certain, should I say, capacity or space for local companies, where you can even bid a bit higher than what a foreign company would bid. So all these things are meant to encourage the level of indigenization. Secondly, all the foreign companies that come in are encouraged to put in place succession plans, and their employment plans are to be made available to the government so that we will know who they are going to need in the next, say, 10 years, and they are supposed to train these people. So there's a lot going on. For now, we are not seeing it. We'll say that the percentage is very low, but it's soon going to be very high, because a lot of people are training at this moment.
And in terms of some of the challenges that Ghana is facing, how is the country overcoming them, and what are the challenges?
Yes, some of the challenges initially was that our percentage or our allocation in the whole agreement was not as much as we would have probably expected. So what we have done is that now the GNPC, for instance, set up a company that is now going to invest with the foreign company so as to increase our stake in the field. Another challenge, like you earlier mentioned, is the local content, which we have a lower percentage, which we are working to build. Other challenges include border disputes which might come about. For example, Ghana and Cote d'Ivoire, having had several rounds of meetings, about 10 meetings, could not resolve and define their boundary, have now gone to the International Maritime Organization so as to ensure that these things are done. So some of these challenges, Nigeria also had its problem with the Cameroon over the Bakassi Peninsula. So you could see that oil could have that kind of threat. But once these are resolved, and as time goes on, you could see that we are overcoming some of these challenges, then we could really get the benefit.
So how then are they actually, all these countries working together to benefit all?
Well, currently, the countries, I must admit, are not really working together, because what you find is that as soon as Ghana, for instance, discovered, we went to Nigeria to learn what the mistakes they had made. But the model law that we passed, the local content law, was not the Nigerian law, because Nigeria would have had the experience on the ground of what a developing country goes through when. So if you go to Norway or Trinidad and Tobago and bring their law and try to copy that or replicate that, then that shows that you are not really cooperating or trying to copy what other countries in the sub-region are doing. But beyond that, the borders are being defined. So I think we are working in that arena. And secondly, gas, for example, Nigeria is supplying gas to the most of the countries. So we are cooperating in some areas, but there needs to be more of such cooperation.
Technology has to be a key driver to boost productivity in the sector. We spoke to a technology service provider at the summit.
As a service provider to the oil and gas industry, what's your observation of the growth and potential of the industry at the moment?
There's quite significant investment taking place in terms of capital investment, and specifically organizations that are global. They're stretching out to the emerging market, particularly South America and Africa.
And what are your observations of projects coming on stream?
And it's increased. It's increased in the past 5 years. There's been an increase in South Africa specifically. There's been talk about shale gas, which is a completely new project. So it means that obviously there is increased investment, and also there's multiple projects that are stretching out into this part of the world.
So aside from South Africa, where else are you seeing growth on the continent?
Well, Angola, there's significant growth there. Mozambique, there's significant growth, particularly in oil and gas. And as you know, we have a gas project that's starting from Mozambique to South Africa. And it's one of the significant projects that we had in this part of the region in the past 5 years.
So what is it that your company does?
We provide business software, particularly for enterprise resource planning and enterprise asset management and enterprise service management. So we try to address the needs of the oil and gas industry in terms of supporting them in those areas.
So you particularly involved in technology. Can you expand on the role that technology has to play within the sector?
There's specific, should I say, trends in the oil and gas industry where you find that there's never sufficient business software support. One of them is that oil and gas tends to be global. So when you are global, you need a global enterprise solution. And Gartner has just rated IFS as a leader from providing a single instant software, which means you can deploy the software in one space and operate it actually globally. That's very important for collecting data. And other players, you tend to find that it's not only the oil refineries and the drilling houses, but it's also the subcontractors. EPCI projects in particular, you tend to find that you will need a software that not only will be used by the plant, but it will also be used by the suppliers and the equipment providers. And then IFS in particular has been geared and tailor-made for that.
So on the African continent, what are some of the challenges in implementing this technology?
The cost, I think the cost in general is a concern, particularly for African operations, and in particular those smaller countries that don't have huge capital. And we have found that actually our solution is specifically tailored for that. It's very cost effective in terms of the licensing. But not only that, we also provide an option for cloud-based solution. Cloud-based solution, which means that actually you don't have to deploy it for yourself, but you can actually have it put in a cloud where you can use it, and other companies obviously can use it. But your information is also is secured only for yourself. So that's actually a cost-effective model that we've come up with, which is geared for Africa.
And that's it for this week's show. Thank you so much for making the time to join us. Don't forget that you can keep talking to us on Twitter, following me at Nozi Pombandra or at CNBC Africa, and our hashtag is ResourceWatch. From myself and the team, it's goodbye for now.